Hey traders, Raghi here, and I'm going to walk you through the trades, a couple of the trades we looked at this morning in the futures room, and day trades specifically. So I want to point out a couple things that we saw on the open, a couple things that hopefully will save you some pain when it comes to positioning yourself in the markets. And that is sort of the sucker punch oftentimes of this opening surge that we'll often see right after the bell. And sometimes it's a surge higher, and today it was a surge lower. And this surge lower was particularly a trap for bears, because as the market looked like the momentum was going to open bearish, kind of very much looking like a continuation of yesterday's sell-off, the market was also moving lower and lower towards volume-derived support. So this is a tool that I've used since 2008. I did it back then on end-of-day charts. I started applying it to intraday charts just a couple of years back. And this studies the Z-score of a volume-weighted average price. And this is actually a support level. You can also think of it as oversold. This is where the sucker punch occurs for the shorts, a high probability of the time. Again, getting too aggressive right at the bell on a move lower. So what did we do? We actually waited for the market to settle down before we engaged to the long side. And overall, the idea is, and here's a second thing you can look for, and this is another thing that we did, and that was you wait for the first 30 minutes, which is the opening range or the clearing range, to complete, and then you take advantage of a correction after that, once the market sort of tipped its hand and been a little bit more open about which way it likely wants to go. So that's really what we were focused on. And the idea was to get long the NASDAQ. We were focused mostly on the NAS and on the Dow, kind of leaving the S&P out of the party. But that's pretty much what we were focused on in terms of getting long the NAS. Again, after the clearing range, got our opportunity a little bit later. We were looking for pullback buys, got our fill, and then that was that. But, you know, a lot of times people feel like if they've missed this, they've somehow missed the day, and that's just not true. You know, sometimes these ranges are going to be quite large, and so don't look at this and say, oh my gosh, you know, look at what I missed. This was a giant range, gang. It was a 166-point range, and really anything over about 120 is over your typical price movement range between 9 and 10 a.m. So that move that we saw was far larger than normal. So don't beat yourself up over that. Recalibrate and re-engage the market. So that's really what today was all about: recalibrating, re-engaging, and remembering that the pit bull low was in effect. It just heightened the likelihood of a low being bought and the market heading higher. And that's exactly what we're looking at. All right, see you in the next update.